Good evening, everybody. This is Johnny Seville with your Acorn Wealth Executive Summary for stock setups for the 29th. So, of course, we are coming down to the last 3 days of open range bias to the downside. As you can see, if we have a look across the market for the moment, you can see that stocks in the S&P 500 have rallied up today a little bit. You can see we bounced off of the 50-day moving average yesterday, and we're back into this kind of channel of downward resistance. So again, this is the kind of short covering rallies that you can get. Volume wasn't incredibly high though, 3.24 billion and 3.37 billion today. You can see we still look like we're kind of in an oscillating downward move. This type of a bounce certainly isn't reminiscent of momentum. So for now, so far, no real big concerns. But of course, that is why we are looking at individual stocks rather than trading the market itself. One thing we pointed out in the last trading room and a couple of our executive summaries was that we're looking for we were thinking that the high yield bonds could very likely rally off of this 86 support, and that we'd be waiting for a break below 86 to start showing the confirmation of the downward move in the market. So as you can see, we've had that bounce, and we're now heading up towards this double top, which will be a test of the market's strength in this recent bounce. So those are some of the key things to look at, and then if we look at the amount of stocks actually in the S&P 500 that actually went up back above their support levels today, you can see not a very big incline, only up 5. We went from a low of 42% of stocks above their 50-day average to 47.03. So only basically what are we looking at, a 4.22% increase on stocks that have actually gotten back above some of their critical support levels. So again, it's a little bit of just a wait and see. Despite that, however, we can see that the shorts have hung up incredibly well. And they are and a lot of the shorts have all just simply rallied into resistance, which is why a lot of the stocks we've been looking at haven't, the stocks in the above or below the 50-day moving average hasn't recovered as strong, because a lot of the moving average stocks have just rallied up into resistance but not crossed it. Again, with HQY, you can see that happened yesterday, rallied up into resistance, straight back down again today. We can look at YRCW, the trucking company. That short setup, as you can see, dropped below resistance, rallied up into resistance today, but didn't cross it. We could have a look at BERY, Berry Plastics. Again, dropped below resistance, rallied up, didn't cross it. FNSR. This one did stop out actually, so this is one that hit its stop criteria, but we'll keep this on the list for a possible re-entry, because I do like this one still as a short setup, but just not right now. But heading into, as you can see, a gap down resistance, so it's going to get a test here, and if we break back down, that'll be the entry signal below these moving averages. But again, we'll take it back to the watch list. HOLX. Now, so all the shorts have actually held up really well, which is actually very impressive. Of course, the longs that we've picked out for hedges against a possible market rally have also held up really well. HOLX didn't break below support. It's now rallying back up, and of course, if this breaks 43, that will be our confirmation for a rally up to our target at $45.93. So that one's holding there. Money flow still positive in the right direction. We've also had RIGL, which has been extremely strong. Of course, that's now rallied all the way up, now breaking through its first target of around 313. It's broke through that now, up almost another 10% in just the last 2 days, closing at $3.38 today. And of course, we're looking at this as a momentum trade. It's now broken above the gap down resistance. It's broken above the double top resistance. We had a kind of a hammer candle today after a strong push yesterday on 2.5 million shares. So I'd certainly raise the stop criteria to 317 to protect your profit and protect your capital. It would be something I'd consider doing. But this, again, that we talked, as we mentioned last night, we look at this to start rallying up towards that $4 next target area now. And of course, one that we sent a text message alert out on today, Prism. Of course, this has been on our watch list for quite a while, and we pointed out that the daily chart, given the volatility of the stock, wasn't quite right for looking at the way this possible flag formation is forming. So let me draw your attention to the 1 hour chart, and you can see here that on the 1 hourly basis, we actually did indeed break out today. So there's the 1 hour downward channel that we've talked about. You can see that it stopped pulling back to that area over the last few days, and then just popped out, pulled back a little, and then continued to rally. So this is a nice little breakout. Again, very, very low volume, so it's a very speculative potential trade. But you've got some great accumulation now in the money flow. Strong close today. So this will now be something that we can be watching as an active potential. And of course a nice little hedge against downward movement in the market. So a couple of things that I'll be watching tomorrow. Of course, we don't have a lot of time left on the current open range, so I once again wouldn't be making any really big moves ahead of a new open range being set at the beginning of April. But these will be the other possible hedges I'll be looking at. COGT, a lot of insider buying. There's a ton of insider buying, in fact, on this just recently. And you can see here, obviously, insider buying is always just as important to look for as well as insider selling. And you can see the executive chairman of the board has just picked up close to $20 million worth only a matter of 5 days ago. Well, the trade date was the 22nd and 21st, so we're looking at a week ago. Is when they picked up about $20 million worth. So that's quite impressive. You can see there's also various others: the chief investment officer, or information officer, the CEO, the chief operating officer. All of these guys all picking up. But you can see Ryan Schulk also buying a bunch as well. The executive CEO of Fluence, it's a limited liability company, which is a 10% owner. I mean, you can see 3 transactions here of over basically adding up to about $24 million worth of buying. So I'd say that's notable, especially given the company's track record of having a relatively decent stock price as high as $12, and now coming off some fairly solid levels of support. So we've got a flag formation there. Obviously, we've got a high-frequency trading sell area that we need to overcome first. But if we break much above 454, this would be not a bad, decent speculative long. And again, I'd look at a stop criteria just underneath this area of support, which would be under around 397. So kind of gives you an idea of again, it's going to be a higher risk trade because there's about 10% of risk in that, obviously, or just a little bit more. So we'd be wanting to see on a 50-cent risk that we've got more than a $1.50 of upside, so we can get a 3-to-1 risk-reward ratio. So if we add $1.50 onto that possible trade, you can see that we find ourselves up around $6, which is where the double top would come into place, which means we've now got a valid trade set up from a risk-reward basis. So there's a 3-to-1 ratio there. The other one that I think is interesting is EEQ. If we take a look at the energy sector, we'll see that the energy sector has come down to a recent level of support, which means that we could potentially see an upward rally here. I wouldn't say it's going to be an extended one because we are indeed still in a head and shoulders pattern, or very complex head and shoulders pattern, but a rally up towards a 75 plus area in terms of the sectoral strength may be possible. We're in a downward channel short term, which is bullish. We had good volume off of support here, which is confirmation. And of course, EEQ is a stock in the energy sector, which is why I think it may be a nice correlating trade setup. I'd be looking for a break here above 18. Its main obstacle is going to be, like the rest of the market, overcoming its 50-day moving average. But there's something we'll be watching for, and you may get some intraday alerts coming from us tomorrow. So I hope that helps you arm yourself for tomorrow's trading day, and have a wonderful afternoon. Take care. Happy trading.